The S&P pulling back just about 0.5%. The Nasdaq down about 1.5%. Small caps down more than 1%, but the Dow actually up over 0.5%. We're going to hit on some Dow names actually hitting new records in just a bit. But first, Joe, I think we got to start off with this software weakness that we're seeing and what it's been doing to the broader market. Some of this weakness, the idea of AI disruption. We all thought AI would disrupt things. I guess we didn't think it would be software. What do you make of this? The fact that it continues, and today Palantir actually caught up in the selling as well, down double digits, along with a bunch of other names in the software space.
Well, as it relates to Palantir, after earnings yesterday, I was somewhat disappointed in terms of the price reaction. I would have thought it would have had more of a significant bounce. I think the investment community maybe has a degree of fatigue surrounding AI and all the tailwinds and stories that we heard towards the end of the year. But I think for the market itself, look, we've gone to a lot of different places, but if you just look at the S&P 500, we're literally in the same place we were on October 29th. So the market just continues this internal rotation. And as the internal rotation is happening, the volatility is kind of elevated. I don't think this is much about, okay, we're seeing a significant overall decline in the broad indexes. It's more about the rotation. It started last year. Software went into the semis. Then it went from large cap to small. You've seen it rotate in terms of the sectors, tech going into industrials and energy and materials. And specifically as it relates today, this is the interesting rotation. Today, the rotation is momentum into quality. If you look at the various momentum ETFs today, you're going to see a precipitous decline in each one of those momentum strategies. So a single momentum strategy right now is not working. You need kind of a little bit of that overlay on top of it. That's why we have the quality overlay that acts as a shock absorber. But right now, it's momentum. It's the momentum factor rotating into the quality factor, and that is weighing on a lot of the leaders from 2025.
Yeah, Liz, momentum's obviously slowing down, as Joe just pointing out. The MTUM ETF down over 3.5%. We're also, you and I were talking before the show about the SPMO ETF as well, pulling back today. The idea of this momentum shift, it seems from the AI economy to the real economy. We're going to hit on some of those Dow names. Is that healthy for the market? Is that something investors should just lean into?
Well, so let's go back to software for a second, and then I'll answer the question about momentum broadly. But software right now is really a sentiment trade that's going on, and there's a lot of indiscriminate selling going on throughout the space. Yes, there was an announcement that seems to be a disruptor in the software industry right now, but it's not going to disrupt everything that is in, let's call it the IGV software ETF, right? We still have cybersecurity names in there. We've got a lot of stuff in that software ETF that is not necessarily related to some of this disruption. I think that a lot of the selling will get to a point where it's overdone, and because it's so broad-based, we will find out that this ended up being a decent opportunity. Will software get disrupted and will things change? For sure, but nothing has changed yet, and nothing's really changed in the macro picture as of now, so I think some of the selling is just getting a little ahead of itself. As for the momentum factor, I mean, obviously some of what's going on in tech under the surface is weighing on momentum, but this is a reason why I made a call for cash-rich companies this year. There's an ETF out there, COWZ, the Cash Cows ETF, that quality was going to be something that investors started to pay closer attention to, things like fundamentals, and that's why we're buying certain stocks. That's where the rotations are coming from. Again, back to software, earnings have been revised higher by 10% since September, but the group is in a 30% drawdown. The fundamentals aren't matching up with the price action there. But I think in a lot of other parts of the market, the fundamentals are starting to match up with price action, and that's what you're seeing with a little bit of this quality appetite.
You know, you're talking about sentiment, obviously, which is really hard to gauge. It's hard to get a handle on. B of A, for example, came out and said SAP is being unfairly punished, basically. They're saying they have so much proprietary data that this sell-off shouldn't be as impacted by the sell-off because of their business. As an investor, should you be trying to find those names right now or wait for it to settle out and then buy the names that are lower, or try to buy now and figure it out?
Well, full disclosure, the last time I was on Halftime, my final trade was the software ETF, and that has not gone well since then because that was 2 weeks ago.
We appreciate the admission.
So I apologize for anybody that got in at that point and is living through this right now. But when this happens, when something so big, a parabolic move to the downside happens, that's not the time to freak out and sell the position. And like I talked about, we've had some broad-based selling since then. I think it's a little indiscriminate. So is it time to go hunting for specific names? Since it's been indiscriminate selling, I actually think that a more broad-based ETF would be a decent entry point once things have bottomed. Bottoming takes a while, right? We might hit what I would call a near-term bottom at some point in the near future, but the bottoming process will probably go on for a while, and we don't necessarily have answers to what this disruption looks like. We're also waiting for earnings on a number of software names this week and next week, so there's likely to be more volatility to come. Also, we've got this uncertainty going on with a new Fed chair coming into office, and that's not going away anytime soon either. So I think that software names and just tech in general is going to see a lot of churn under the surface for probably the next couple months. So you could start toeing into some of this now. It may get worse before it gets better, but it's hard to believe that with this much multiple compression, we're at about 32% multiple compression in software right now. Hard to believe that at some point that doesn't stall out and reverse upward.
All right, Jenny, you and I were talking before the show. I know you're looking for names that are actually AI beneficiaries in the software space. How's that hunt going? Would you advise other people try to make a call right now about buying into the software space on this weakness?
I don't think you do it right now, but I think the work and the research process has to start immediately, and there's opportunity. All I know, to Liz's point, when there's this level of carnage, there are babies being thrown out with the bathwater and opportunities being created. There's two parts, though, Liz, where I disagree a little bit with you on, which is I actually don't think the way to play it is through an ETF, because I think there are companies out there that will go to zero, and I think that there are companies out there that are 50% off of where they should be right now and will probably see that return. I don't know which they are.
Companies will go to zero in the public market or private market?
No, I think in the public market.
Really?
And I'm not saying like S&P 500, but it's been interesting. So I was telling Frank, this part was just for fun, but yesterday, just for fun, we said, here's a list of all the S&P 500 companies and loaded them into ChatGPT and Claude just to see how the two would differ and say, should this be an AI beneficiary or hurt by AI? And then the second question we asked was, does Claude code benefit or hurt? Now, there is a lot of self-conflicted self-interest on the Claude responses on the Claude code part, but there was so much conflicting ambiguity, even on the ChatGPT and Claude side of it, that it was interesting to me that there was not consensus. Now, we've been doing work on these names for the last few weeks completely, and Liz, where I also disagree a little bit is, you're right, there's tremendous multiple compression, but we still think there's not enough multiple compression on many of them. So if you look at a Datadog, for example, Datadog seems like it should be a beneficiary from all of this. It has had multiple compression. It still trades at like 300 times earnings. Or you take, what is it, like Palantir is still at 100 and change times earnings. Who else was I looking at? There's like another one that's really compelling, but it's at 99 times earnings. So even with multiple compression, there is not the margin of safety broadly out there, I think, to justify the pain and the ambiguity that AI and Claude code has introduced in this space. But again, the research process is not going to be short with these, so you start it today. I'm with you completely that there's opportunity. Right. I would just rather, go on individual stocks on that.
Snap, come over to you. Are you starting to research, looking for possibly names to buy? Are you writing off this sector completely? How are you viewing the broader space and the impact it's having on the broader market?
Yeah, I mean, for me, Frank, it almost feels like a protracted DeepSeek moment that we had last year, where headlines are being developed. Obviously, yesterday was kind of this Anthropic news on what innovations are happening in legal, and maybe you don't need counsel in certain respects to review contracts. We'll see. But for me, software, to Jenny's point, it still is expensive, right? So it's still 8 times sales, the software complex, and I think you have to be discriminated in terms of what names you're looking at. Also, to Liz's point, I think it can go longer, right? I mean, a lot of these stories. So it is, for me, potentially inching into the story. But I think the main point for me, as I look at the traditional SaaS model, there could be some harmony with AI agents and the traditional SaaS model, where these two technologies could work together in a productive way. So yes, there will be winners and losers, but you just have to continue to pay attention. I wouldn't be selling here, but I potentially would be inching in going forward.